Well, hello there, my friends. Chris Marcus here with you live from Puerto Vallarta and joined on this incredible Basel III day, which very exciting in terms of pricing and all of that other stuff so far. But actually what I think is incredibly excited, what I'm excited about is that Rafi Farber is joining me today. Creator, founder, CEO, head analyst of the Endgame Investor. And I would say that if I've been successful in anything that I'm doing here, I might add that the one journal that I would say if you simply read one thing, there's one stop each day. You don't have to skip CNBC, can throw out all the rest. I would say that it would be Rafi's The Endgame Investor, which I am pulling up here. Rafi, how are you, my friend?
I'm doing better than I thought I would be doing today, so that's good.
Yeah, well, I got to say before we dig in, I was a little concerned. I mean, some of these characters you're writing about here, this Chris Marcus, traveling silver YouTube analyst who has declared war against many three-letter acronyms to do with government trading. Geez, is that my resume? But fortunately, I think, and we're going to dig into Basel III, what happened. I mean, it seems like if we look at the price chart here, is not much all that exciting in terms of that news. But we can dig in and also what this means, what it means going forward, and perhaps if there are ways that whatever Basel does and the banks do, that people can begin not caring about this stuff anymore. We have our silver, have investments, but I think there's something unnatural about the way this has dominated our lives, myself obviously included, because, when you see like a nice normal chart pattern with the red line there like that, it's easy to get sucked in and sometimes even get ourselves worked up. But where we stand right now, Rafi, what is really important in all of this, and what does this Basel III day signify to you?
Well, the day itself doesn't signify much, and most importantly, I think we have to keep in mind that markets don't trade, on obvious signals like this. Basel III is suddenly implemented in Europe, and then something happens, and people who position right before are going to get rich because they know the exact moves on that exact day. That's not how it works. It's usually almost always disappoint people in the short term. That's just how it is. And the art of this business is learning to live with that and be patient and go with your convictions if you know that you're right, which we are. So I wouldn't put too much significance in today, DAFCA specifically today. Basel III is implemented, but there is significance to it, and that's undoubtable. Undoubtedly, there's a lot of significance to it. For us, for people who trade gold and silver and invest in real money, you can see Basel III as another attempt at central planning a fractional reserve system in what might be considered a slightly less dishonest way. If you take the whole idea of fractional reserve, that you put your property in somebody else's institution, then he lends it out without your permission, that's theft. And that leads to a business cycle, and then that leads to booms and busts, and that's the whole thing. So if you, taking away all the percentages and the nuances and the technicalities of what is considered a zero risk and all this, basically Basel III is a way to steal slightly less and be slightly more honest with an inherently thieving system. And what is slightly more honest about Basel III than Basel II or Basel I? And there's definitely going to be a Basel IV and V if this whole monetary system, maintains itself for another 2 or 3 years or whatever. I mean, central plans never work. So they'll just keep coming up with more of them that don't work. But what's really important about this for us, and what is more honest about Basel III, is that gold, physical gold, the material, the metal, is going to be considered a zero risk asset, which it wasn't before. Until today in Europe, it was considered a tier 3 or whatever tier number. I mean, all these numbers are just arbitrary, but what changes is now physical gold is considered part of your capital, and you can lend against it at 100% of what you have on your balance sheet, as opposed to whatever, I don't know what percentage it was before, but it was considered more risky. At the same time, paper gold, meaning gold futures and gold contracts, rights to basically unallocated rights to the physical metal, is not considered a zero risk asset. So banks cannot use at least as much of that, or if any of that, I'm not sure exactly. They can't use that to fund the assets on their balance sheet. So what ends up happening is the demand for paper gold goes down and the demand for physical gold goes up, because physical gold is more useful for building assets on a balance sheet than paper gold. Now, where the Keynesian economists and all the people that run all these central banks, we shouldn't think that they are, at least in my opinion, they're not trying to hurt themselves, and they really do not understand gold. They just think it's some silly metal that for some reason humanity has some trust in. And same with silver. They don't see it as anything important. They've always struggled to understand why why people have this sort of love for this metal. It doesn't make any sense to them. So they think it's just a commodity. And they think that the real center of the monetary system is the US dollar, and gold is supported by the US dollar. That's what they think. So they think that if you take away the ability of banks to fund their balance sheets with paper gold, then the demand for paper gold goes down. And therefore, when the demand for paper gold goes down, the price for paper gold goes down, and therefore so does the price of physical gold. That's what they really think is going to happen. This is their thinking, and we have to understand this is their religion. This is what they believe. They believe in paper money to the end of the universe. They believe in it for real. But what they don't understand is that the dollar is supported by physical gold. The reason you can buy anything with the dollar is because it's still transferable into physical gold. You can still and silver. You can still acquire some amount of this real money with this paper, and that's what gives it any purchasing power. So really what's going to happen is when the demand for physical gold goes down, the price of physical gold goes up. Because we talk about manipulation, this and that, and I agree with it. I don't give it as much consideration as other people in our camp. I just try to ignore it because it just annoys me.
Come on, who could you be talking about there? Who?
No, I'm not saying it doesn't happen. I'm just saying I don't want to focus on it so much because it just frustrates me. I can't really do anything about it. I'm just me. So what makes manipulation possible is when they create these contracts and they dump them on the market, and that pushes the price of physical gold down, right? When there is less demand for this paper and they can't use it to fund their balance sheets, that can't happen as often or as much or as intensely. So you'll have less of an ability by these banks to manipulate the market at 6 a.m, right before trading, and make these huge dumps. That should start. It should start to become less and less obvious, and because it will be less and less profitable to do it. So that's the importance of Basel III for our crowd.
Wow, well, that's certainly a nice uplifting statement on the structure of our global economy. And Rafi, you mentioned a few things in there about trading gold and silver, and also which parts of this are actually real or not. And I guess my question would be, let's say someone wants to opt out of the system. Mm-hmm. What would happen if people, instead of thinking gold or silver went up or down, I mean, maybe there's some point in which that factors in, but let's say I wasn't trying to speculate, but I see the supply of dollars is being increased. If I just look at silver as savings, and if other people did the same thing, what do you think would happen in that case?
If they saw it as savings, meaning you think that people see, you're saying the average guy in the street sees that. If we're talking about the average guy in the street, he's not going to be looking at the Fed's balance sheet. The average guy in the street doesn't have any idea what the Fed is or a balance sheet of a central bank is. He's not going to be looking at that. He's going to be looking at the prices of his groceries. That's what he cares about. So if the average guy in the street, if the public starts seeing that their food bills are going up and up and up by 10, 20%, every 2 or 3 months, they're going to start freaking out. And when people freak out, they're going to buy silver, just like we saw in Silver Squeeze. There was for about a few hours, maybe 24 hours, maybe 48 hours. There was like this intense just rush into gold, into silver specifically, and also gold. And what the hell caused that? It's a return to natural monetary phenomena where people become worried about the status of the dollar, and they go for real money. I mean, it's still in our psychology. In many languages, the word for money is silver. In Hebrew, in Israel, where I live, the word for money is kesef, which means silver. That's what money has always been, and it's like we have evolutionary psychology, right? Our bodies have evolved over hundreds of thousands of years. We behave certain ways, socially, sexually, whatever. Also monetarily, how we behave, because economic cooperation has been in our species for thousands of years, and it's ingrained in our evolutionary psychology. So there's no surprise that when people panic about paper money, they'll go back to real money. They're going to go to silver and they're going to go to gold. And when that happens, everything is going to be denominated in this material. So that's how you're going to buy assets. That's how you're going to buy anything. And you're going to need real money for that, because all the other money is going to be nothing.
Rafi, do you think there could be any connection between the way most of us view these paper dollars and the MK Ultra mind control programs that the CIA acknowledged back in the 70s? Which interestingly, Joe Biden was on that panel in 1975. But if we're talking about something that, when you think about it, is inherently silly, that, the same banks that always get caught with their hand in the cookie jar, they melt it down again. We're going to print more money, trust the same people. So I just wonder if somewhere in all of this, because when you take a step back and think about it, it seems bizarre. And is there a way that, again, is it really come down to how we think about these things?
MK Ultra. These are not. It's not my area of expertise of CIA, plans to take over the world and whatever programs that they run. I know it's all evil.
But I mean, if we see, and the point isn't to get into all that, but just that a lot of intention has been put into getting people anxious and feeling like they don't have enough, or they're not good enough, or their toilet paper isn't as absorbent as the next guy's. And then it's just, as you're saying this, and that popped into my head, and it's in this same era. What was that? The commission, I think, was 1975. And my way down here yesterday, I'm listening to a book about silver, where they're talking about CFTC, I think was 74, whenever the futures contracts. And we really have this era in the 70s where things started to go off the tracks. And then, culminating in 1980 with the Hunt brothers and $50 silver. Yet it seems like there was more there than just the Hunt brothers, because you had $850 gold. Just a lot happening at that time. And you look at, and myself included, more than anyone perhaps, of just how anxious we've always felt about money. And here in the end, something that is arbitrarily being decided by a bunch of lawyers. And I just wonder if somewhere in there, rather than the way we think about, well, it's great, I have $1 million in the bank. If people started thinking about, well, I have X ounces of silver here, because probably if even a few people thought like that and used silver as savings, that would probably end this paper charade overnight, I would imagine.
Yeah, I would. It takes me back to something that Dan Oliver said. He's one of my favorite analysts, very brainy guy, monetary genius. I love everything he says. He goes back into monetary history, into the history of the dollar, and Joachim's Thal and the Thaler. It's not that the dollar was backed by gold and silver. There was never any backing. It was the definition of silver. The definition of a dollar was a unit of silver. That's the original definition that's what a dollar was. And it's, these, if I'm going to take, let's say an analogy on how social revolutions happen, right? If we take this whole, pandemic thing that we've been in, how does society change? It doesn't happen, in central committees coming and planning certain things and saying, okay, we're going to do this and that, and we're going to change humanity this way. They take advantage of certain things that happen, and they push society in a certain direction that they want. And then you see the change kind of like sort of like organically, but shifting through the reality that they're taking advantage of. It's like, what Rahm Emanuel said, you never let a crisis go to waste. So this is what's been happening the past year and a half, is one of the greatest examples of that ever in central planning history. Never before has it been a global thing. It's always been national or country, but never global. Now it's global. So So same with monetarily. I mean, it's money started with gold and silver, and gradually, as crises happened, governments took more and more power. And we saw in 1933 there was another, crisis in the Great Depression, and FDR took that opportunity to take the entire gold supply away from the citizenry. But now they have so much power, and at this point, and it's important not to freak out when one side has so much power over the entire world, because when you have that imbalance, it doesn't sustain itself, and everything swings the other way and it collapses. So we're getting very close to that, and it's important for people not to be scared and not to be despondent about the amount of power they're amassing, because the faster they amass, once they have it all, they have none. Because once they have everything, everybody else has nothing, and they rebel. Hopefully it doesn't get that far, but that's where we're headed. And those who collect real money now, they will have the resources to rebuild their lives and their families' lives when this is all over, and it's getting there.
Yeah, and I think that's exciting. Let's say we fast forward 5 years in time. What do you think? I don't know whether the price starts moving this week or next week. Are we would you be in agreement that we're probably going to see a substantially higher price of the metals 5 years from now?
Oh, absolutely. Yeah. Yes, no doubt. 5 years from now. I mean, I think it could go to new highs this year. I mean, there's going to be a point. There's going to be a point where this whole transitory narrative that they have feeding into our brains through all this mainstream media and stuff, it's going to fall apart. But that's really the only thing they have left, because there's no way that they could raise interest rates even a quarter of a point without crashing the entire system. I mean, this is a point I made in my most recent letter to my subscribers at the Endgame Investor, that you'll never hear about this talked about. You'll never hear this talked about on the mainstream media at all. But there's something like $800 billion in climbing stuck, flipping back and forth between the Fed and the banks. It keeps rising by like $30-40 billion a day, and it's going to hit 1.52 trillion in about a month at this rate. But the reason that all that money is bundling up is because it has no other place to go. Because it's a strange concept to even wrap your head around, but cash deposits are a liability on a bank's balance sheet, and a liability has to be backed with capital by bank rules. And the only way to raise capital is to dilute your shareholders for these banks. And they don't want to do that, so they don't want this extra cash. So they put it back at the Fed, and you have it building up and building up because of all the QE that the Fed keeps printing every month, $120 billion, and they don't stop because they can't stop. It's like a junkie that literally can't stop. He'll get delirium tremens and, see flying monkeys and go crazy, whatever it is they see. So this keeps building up, but where is it going to go? It's not going. They can't just snap their fingers and say, okay, $1 trillion gone away. That's it. It doesn't. Financial markets don't work that way. So this money eventually has to go somewhere, and the reason it's not going anywhere is because there's no interest to earn by taking it out and putting it somewhere. So the paradox now is that when the Fed raises interest rates, because let's say inflation is like 6-7% on the CPI, and people start going, oh, Fed, you really have to do something about this. This is really not transitory. Please raise interest rates. And they'll say, okay, fine, I'll raise interest rates. So what happens then? Then all this money, it's going to be what, $2 trillion by the time they figure out they got to raise interest rates? They're going to raise interest rates, and then all that money is going to say, oh, look at that, we have a place to go. And all this money is going to be flying in. And then we're in a situation now where when they start raising interest rates, the money supply is going to explode even faster. So there's really nothing they can do. It's just we're waiting for this transitory narrative to die out, and the end should be pretty quick after that. I mean, I don't know exactly how quick, but if you've got a few years left on this planet, you're definitely going to see it.
All right. Well, if you said 5 years from now, based on all this knowledge that the price is going to be a lot higher, we're going to live to see it. From my study of the metaphysical and also the conditioned and subconscious minds and all those raveled into one. In fact, it reminds me of this book I read about Nikola Tesla, where he once said that, or the author quoted him as saying, he never touched anything until he had visualized it. So he wasn't like going around tinkering with his screwdriver. He would sit there and just imagine how it would be. And by the time he actually did anything, it would be in place. And along those similar lines, quote from the great Dr. Richard Allen Miller, who will be on the show soon. Rafi, you're going to love him. He
Okay.
says often, I wouldn't have seen it if I hadn't believed it. And I think perhaps one of the reasons why all this has taken so long to evolve is that, we're, recreating the feeling each day in the financial markets of getting hit over the head with a shovel. And then there's, and I think it's natural to feel the frustration and to vent. Yet, I don't know, maybe we can't know 100% the future, but would we be better served if we said, this is going to go when it's going to go, and start doing whatever you would do in your life? Let's say it's at $100 silver, $300 silver, whatever you would do then, just begin living that way now. And whatever happens with the finances, we'd probably be so much happier and enjoying life more and being productive and meeting great partners and friends that work out better anyway. Because if somewhere in this financial system is a sleight of hand, is that reasonable? What do you think about that?
Yeah, yes. If you want practical advice on how to handle all this, then I would say yes. We have to have the courage of our convictions and understand where the world is going, and start preparing. And hopefully not start now. I mean, it's kind of late to start, but it's not too late to start. It's just you should have been starting already, given what's been going on. Yeah, I mean, if you have a backyard or you have a place to grow food, start growing some food. Start getting good at gardening. Start getting out of the grid as much as you can reasonably. Don't obsess over it. But start stocking up, have some dry, non-perishables with you. Get armed if you're comfortable with having a gun. If you're not comfortable, some people aren't. But do what you can do to protect your family, and just be wise and save in real money and act rationally. Doing things to help your situation will make your mentality more stable, instead of watching the markets every 5 minutes, unless it's your job to do that. If you're protecting your family by doing that, like we do,
could be.
Do that, but
no, that's not throw assertions like that. In fact,
okay.
I had a conversation with my intuitive healer this morning, and she was suggesting that perhaps less time yammering about, okay, so fine. We heard Rostin Behnam say they tamped down the price. We've known it. And I mean, I guilty, and I acknowledge, but at some point, I guess that's what I've been thinking about, where, all right, we know at least I can't know it for anyone else, but I mean, I don't know what else there is to say about silver, and the idea of that we need to be glued to a screen, or that even, think about it. Back in the 60s and 70s, I mean, I guess Wall Street was always somewhat of a behemoth, but, then you had the guys from Liar's Poker create the mortgage products. I mean, it's become a much bigger industry than it ever was. And I just wonder if that we can actually opt out of that more easily and gracefully and quickly than we might imagine.
You can. I mean, half the battle is having physical silver in an accessible place. Once you have that, and it's not like we haven't seen this before. We've seen it before on a national scale in Germany, in every hyperinflationary economy. We know basically what happens. We know the patterns. We know that people with real money, they can buy enormous amounts of real stuff. Why? Because in a hyperinflationary economy where people have nothing but money substitutes, meaning the paper that represents money, but not money itself, and those substitutes die, the first thing you need to survive is money. Why? Real money. Why? Because we are a society that cooperates in a division of labor. None of us know how to survive and do everything on our own. Very few of us. So, the advice that I was giving before, learn how to do more things on your own than you otherwise would. Doesn't mean you're going to be able to survive on your own with just yourself. It's not going to be possible. You're going to need a support net. You're going to need friends. You're going to need real people to talk to, just for your mind, and to rely on and to trade with. You're going to need them. But the reason that you need money first is specifically because you cannot do everything yourself. So forget about everything else. Forget about your stocks your bonds, even your real estate, you're going to need money. You need to trade. And once you have real money, you will be able to trade that real money for a lot of stuff, because people who don't have it are going to be in desperate need of it. So this is a time. I wanted to say that what really woke me up, at least out of a stupor, was the 2008 financial crisis. That's when I started looking into this, because I realized that this is all wrong, right? But they kind of got control of it through a bunch of money printing. But I didn't really start meeting people like you and like Rob Keens and Tom Bodrovics and Alistair McLeod and these real guys that just like hard money has a body to it, and you can rely on it. I haven't really met the community until after this whole COVID money printing started, and that that's when we really started to coalesce, and you can see this community of people really starting to communicate with each other, and
you didn't expect to be a silver superstar like you've become, did you?
No, whatever. No, I didn't.
It's so good looking, you couldn't help it. I mean, what are you gonna do?
Yeah, but like you can't deny that everyone in this movement, they're real
Definitely
people.
Cannot deny it. It's true.
Yeah, and some of them are just way out of left field. Like I would never imagine that I'd meet people like this, but I'm the same way, because like I'm nuts in my own way. But as crazy as all of us are, we are more down to earth than the people in Wall Street trading this paper in 1,000 times leverage that makes no sense off of a central bank system that is totally corrupt and crazy. I mean, we're the ones who are down to earth. Everyone else is floating up in the air, and we're just like, come down here. Hello, make things interesting. But yeah, so it's been hard. It's been frustrating. It's been a little bit terrifying the way people are behaving. But at the same time, every so often you meet these people that you cannot deny that they have real souls, and you talk to them, and it's comforting, and you have faith for the future of humanity. I mean, it's nothing less than that.
One perspective could be that life has been training you to be a great leader.
Could be. That's one thing I do not want to be, but finding it.
Well, I hear Moses wasn't all that keen about it on first glance either, but that's how it went, right?
No, he wasn't.
So if you see any burning bushes this week, you got to definitely check back in and let us know about that. Rafi, you have a little time? We can take questions from the audience and your fan club.
Sure, yeah.
Okay, well, I just fired that in there, and perhaps if you will allow me one moment while we get some questions fired in, I'd like to have a note from the kind folks who brought us today's show, and actually reminded me of what you were saying, in that, yeah, I guess money's good and all that, but okay, what if you're younger, or whatever your life path has been, if you don't have a lot of money or gold and silver, is it possible that money doesn't have to be just gold and silver, but we always hear that analogy, is it better to have the fish, or to know how to fish, or to know how to show others how to fish? And perhaps in this environment where you're saying food will be important, maybe it's a great chance for, whether you have money or not, someone who just has a plan or is able to organize people. Or it's kind of like, rather than having money, can you mine for money? You like that segue? As I lead into a quick note from Bluestone Resources, who is bringing you today's show. And while I'm making jokes, and Rafi, we're going to have to talk about some of these silver shops I found on the beach too. Bluestone, led by Jack Lundin, is actually going and digging out gold out of the ground. They have an update on the Cerro Blanco project. And Yara, perhaps you could add that link into the description field below, because if people want leverage, even if you don't care about anything that they're doing, if you do want money and you're trying to make money and you want leverage on a gold move, certainly it's been nice getting to know Jack, see how they do things there, and by all means, for your own due diligence. But Rafi, before we take some questions, do you have any comments on Bluestone, gold mining, or anything to that effect?
On Bluestone specifically? Well, on mining, it's mining generally, right? So, we talk about physical gold and silver a lot, and I get the question, what's the point of mining stocks at all if everything's going to crash? If the dollar is going to crash in my mining stock that's denominated in dollars, what's the point? So my answer is simple. Look, stocks are a title to capital. It's a piece of a company. And when the dollar does crash and everything denominated in dollars doesn't make any economic sense anymore because you don't know what a dollar is worth, it's not worth anything, then who are the companies that can pay real dividends to their shareholders? They're the companies that produce real money out of the ground. They can still pay you dividends in a money that has some meaning. So really, it's a title to future produced money that you will be able to be a part owner of and be paid in maybe certificates of a percentage of product each year, and they'll be able to mine because they have mining companies have reserves of gold and silver that they mine that they can use to keep mining more by acquiring the resources they need to do that. So if you want to have real dividends coming into you, and exactly how logistically that's going to happen, we'll see. But it will be possible, whereas other companies that do not have any reserves of real money, how are they going to pay you dividends in dollars? What's that worth?
Yeah, and actually, I'm going to somewhat selfishly take the first question with Rafi the Wise, even though I've had a couple in here so far. But Daniel Robinson, you are up next. In terms of a mining stock, whether it's Bluestone or otherwise, as I take a step back from Wall Street, now out of the US, and just helpful for me to have a different perspective. But, I know we're trained to think we're buying low, selling high, but I think the idea of like a capital market is that, let's say you go out and save your money, you have your profession, you contribute something to the world, you go out and you get X, what we call a salary or an income in return. And rather than like speculating on stocks, I think it's become normal that we have to take our savings, throw it in something called a 401k, hope JP Morgan or Vanguard is going to look out for our best interests. Whereas, let's say, okay, I think silver or gold is going to be valuable. It's like you're buying a percent ownership in a business that hopefully, if all goes well, is going to be giving an income stream. Maybe it's paid in dollars. Maybe at some point more of the companies shift to metals-backed dividends. I know it's not always the easiest thing logistically to do, but I mean, rather than counting on the U.S. Treasury for fixed income, that's how I've thought of it, which makes it a lot easier to me where, hey, if I find people that I get to know the management, I'll tell you what, even if they're digging in some place that doesn't have gold or silver, if you have the right people in place, all right, that's going to happen. But it's like, do they double down, or do they say, all right, let's acknowledge to our shareholders we missed and go find a better place? So, I mean, if people don't want to be, a mining stock guru or a trader, is that a reasonable way to look at, you'll have an income or you're an owner in a business? Because I don't feel it's often phrased like that. Right? I've never really heard anyone say anything similar to that in Wall Street the 20 years I've been there. Do you agree? And is that a helpful way of thinking about this?
Well, yes. I mean, that's what the capital markets exist for. It exists because business owners have an idea for business. They don't have the capital, so they go to the public and they say, "Here, I'll give you a share of the business that I'm going to do if you give me some money, and then you can have some of the profits." It's a very simple, reasoning transaction. But I mean, we can take the example of, let's say, Chris, you still there? Okay.
I am.
Let's take the example of, it just popped into my head, right? Let's say kids, maybe even 7, 8, 9, 10-year-old kids, they don't really know where eggs come from, right? Some of them have no idea that they come from chickens. They just think they come from the store. Why is that? Because division of labor gets so complex that
Goldman Sachs makes those, right?
Well, the golden eggs. The division of labor becomes so complex and confusing that nobody thinks about where anything comes from. And we have the same thing. We don't know where most of the stuff that we have comes from, exactly how everything was put together. We have no idea. It's like Milton Friedman's example with the pencil. How did the pencil come into existence? It's so unbelievably complicated. You can't trace it. But that's what's happened with Wall Street. Everything has become so complicated in this totally drugged out paper system of derivatives that nobody knows what anything is anymore, and everyone just watches and maniacally their little tiny little corner of the market, and becomes an expert on it, and that's what this complex system leads to. But we have to know that this is all coming to an end, and everything's going to be much more simplified very soon. So yes, when you own a mining company and you don't want to trade it, don't. I don't recommend trading. I only do trading somewhat over core positions that I hold because I'm kind of forced to, because that's the way to deal with this volatility. But I don't want to be a trader. I don't want to buy low, sell high. I want to buy good companies and earn income from those companies. I want it to be simple like that again, and it will be. For now, we trade a little bit. That's just how the reality is right now. But fundamentally, you want to get good companies and own them, and with honest people that hopefully you have some personal connection to. If not, you can't have all personal connections to everybody. But yeah, and own this capital and have a stable income stream for when you're older and you retire. You don't have to overthink it so much. The current environment is what makes everyone overthinks this stuff, because we're all forced into it. But it's going to end, and I look forward to not having to trade anymore.
Yeah. In terms of personal connections, I mean, everybody watching is part of the Arcadia family. So if there ever is anyone that does need help in some way, well, we do have a forum on the site, and everybody here is part of the family now. So you're always together, and that's what I think is exciting when you really start digging into some of those things, which our volunteer team has been doing. And Rafi, you've seen a little bit of that, but I want to get to some questions here. I know I promised that. So Daniel Robinson says, Rafi, with an oil-backed currency, do you think the dollar needs oil to go much higher for it to blow up?
I think you're saying that the dollar is oil backed, and if oil goes up, then the dollar goes down. I'm not. I don't think I look at it that way. There's a theory that the dollar is oil backed because some government official called it petrodollars in some academic paper that he wrote in the 70s or something like that. But in reality, I do not believe that the dollar is backed by oil. The dollar is still today backed by gold because of the Misesian regression theorem, which meaning what prices, what you need to buy today because you know what prices are today because you knew what they were yesterday, and so on into the past. When the dollar began, because when the dollar began, it was an exchangeable thing for gold, and gold is what started transactions, and that's how the monetary economy started. So it all goes back to gold. So the reason that the dollar has value is because it can still be exchanged for gold, not necessarily oil. So when oil goes up, it's more of a reflection of the dollar's purchasing power going down generally than the dollar providing the backing for oil. Rather than oil providing the backing for the dollar. That's more of a political construct because the U.S. Army protects Saudi Arabian interests, and therefore all oil can only be bought in dollars. That sort of extends the dollar's purchasing power a bit, but it really comes back to gold, not to oil necessarily. So I expect oil prices to go through the roof when the dollar collapses, and gold to go the same way as oil. What's interesting to watch though is the gold to oil ratio. That should head down. I mean, less and less gold should be able to buy more and more oil, and that's really the interesting ratio that I want to follow.
All righty, and I'm looking for our next question. Well, actually, I guess a couple of them are touching on this. And how long do you think it takes before some of this is priced into gold and silver? I mean, what is your expectation? Again, not giving legal financial advice, but do you have any feel for, you think we'll see something this week or by the end of the year? Any thoughts on that?
You mean in terms of Basel III affecting the Basel III coming into force? Well, I mean, I'd have to really understand more about which banks have to do which stuff by what date. I don't think that the penalties for using gold derivatives are so steep that all of a sudden all the banks have to exit the COMEX immediately and just get out. They're not going to do that. But what I do think is going to happen, and I think we've seen evidence of it. If I can share it on the screen, I'd have to look at it, but it's on Gold Charts or Us if you want to go find it. Gold Charts or Us has the Nick Laird's site has the open interest in gold futures in the COMEX, and we can see that since we're at lows in open interest in gold futures, the GC contract, I think 3 or 4 year lows, and I don't think it's a coincidence that now, when Basel III is being implemented, that we're at lows in open interest. Open interest means the amount of contracts that are being traded that are still open. If it's low, that means less people own this gold derivative stuff. So I don't think it's a coincidence that we are at 3 or 4 year lows in this number at the very time when Basel III is being implemented. I do think it will, if the monetary system survives through December, and it might, but I can't even say that it will for sure. When the UK banks, the LBMA, the real the managers of the London gold supply, when they are forced to liquidate their gold derivative positions in favor of physical gold, then things might start getting serious. But by then you also have the possibility of the transitory inflation narrative blowing up, and you have holiday shopping. You could have another round of lockdowns. I mean, that might be where Europe is headed. I don't even know. Israel is headed back into maskiness, and they're freaking out over strains of COVID, and I don't know what they're going to do. So some of the world could shut down again, and it could accelerate this process. But look, the message is, I don't know exactly what month it's going to be, but we do not have a lot of time. We do not have years. We have, I think, months. I don't know how many. Could be 12, could be 15, 18. I don't know. But I would measure it in months and not years.
Yeah. And Rafi, a question I have is that, let's say that there is a reset coming. Wouldn't that mean that whatever you see, whether like stuff like this, I mean, let's say they were going to reset it to $1,000 silver or like whatever it is. Like the price action before it happens, whether it goes up or down the dollar today, is completely irrelevant if you think that this has to come to an end at some point.
Yeah, it is completely irrelevant if you're going to live your life and commit to buying, let's say, I don't know, 20 ounces of silver a month or whatever it is that you can afford. And that's just what you're going to do. Okay. Then this is all irrelevant. If you want to try to play the game, then it is relevant, and it can be fun. But just like any game, you can get addicted to it, and it can hurt your mentality, and it can suck you in. And you've got to balance things. I mean, look, there is a lot of excitement to this volatility and trying to fight and looking at all these manipulations and stuff. But look, in the end, this is all fluff. This is all just based on lies, and it's all a dying system trying to maintain itself for just a little while longer. And it's not going to last. So if you want, a sound mind, continue with your life. Do what you can to protect yourself and your family and your loved ones and your friends. Build a social net of like-minded people who respect you and you respect them, and save your money and build your skill set. That's all you got to do.
Yeah, or you could just come to Silverfest, where that's exactly what we'll be doing. And Rafi, how are we looking to get you tunneled out of Israel by then?
I can leave. It's possible I can get through the airport.
Yeah, there we go. That sounds like Rafi the Wise is committed to Silverfest 2, which will be here in Puerto Vallarta in person. In fact, Rafi, if you promise you'll be here, I'll start my garden now so that we'll have food growing by then. And if nothing else, we could learn. And even if my crops don't get too far in the first round, stuff like that. That's what I'd really like Silverfest to be. We're just, okay, silver is great, but all these other things that you're talking about, so that it can be something where you can come and meet people in person and say, hey, whatever situation you are in life. Maybe you have a lot of silver and you're looking for younger people and their energy to bring things forward. But did I just sell you? Do we have you coming here? Is that you're gonna? We could film you. It's really exciting.
I would love to come.
Palestinian snipers shooting nearby.
And actually, there's not much Palestinians near me. It's really, I'm in Druze town. I'm surrounded by Druze people. They're different, and we get along well. So everything's cool here. Nothing ever happens. Look, I would love to come. I'm gonna see if I can swing it with my wife and my kids, and we'll see. I'm gonna try.
Do you think your wife would be swayed maybe if we had a silver-plated helicopter come pick up the family?
Yes.
All right. Spirits make it so. Rafi, you did mention the COMEX, which that old novelty. So here, interesting. By the way, June 17th, where the price of silver randomly fell $1.50, massive volume. Sure, just a coincidence. But since I'm staying to my pledge of not really caring about stuff as silly as that, one thing that actually I think is kind of interesting. This is the open interest on the July contract. And correct me, I believe this is in this number. There is one more day before that's the number, correct?
Yes, that is correct.
And 32,000 at 5,000 ounces per contract. That's over 150 million, which again, I think you followed a bit closer than I do, but going into 1 day remaining, that's quite a bit right now. Yes.
Yes, that is. I think there's something like 110 million ounces in registered stocks, and I recall that in July, this happened. This happened in July, and this is around when silver was threatening 30 and gold was pushing 2,000, was pushing 2,100. In July, I think it was some large amount. I don't even want to say a number because I don't remember what it is, but I think the open interest at the end of that trading month for July was so high, it was higher than the existing registered stocks. So a big chunk of eligible, meaning just silver storage, had to come out of eligible and onto the market to satisfy all the contracts that got delivered. And that could happen again. Might not. We've seen like on the last day, 20,000, 30,000 contracts suddenly be covered in a day. And maybe that'll happen, maybe it won't. But one of these days it won't. And that might be tomorrow, it might not. And we'll see what happens. That's all I can say.
Well, if we let go of whether the market breaks or the COMEX is busted, I mean, you kind of need a pretty big number. I mean, if you saw, let me pull that back up here. Even if with 32,000 contracts with 1 day going, I mean, you see we had about 10,000 on Friday. I mean, even if you got like 20,000 contracts rolled over, closed out today, bringing it down to 12, that would be 60 million ounces, which would be a handful. And do you remember what the number was? Because remember last July was a big one as well. Do you remember the exact?
Yeah, I think the record was, I think it was 17,000. I think that was the record. Might be off by a few thousand.
Based on the rate at which, and we'll find out how many there are today in a couple of hours. But I mean, it would seem like there's at least a decent chance that this number tops last July's record setter. Would you agree with that?
Yeah, there's a decent chance. I've been disappointed before, but really it's not quite the number of deliveries. It's more what direction they're going in. Because we saw a lot of deliveries of gold, I remember in March, April, May. But those were deliveries into the COMEX and not out. We want to see it out. And it's been going out. And I think these deliveries are more out than in. But we'll see. Especially since, you see on these charts, silver started to leave the COMEX right around silver squeeze, right around when this movement started. And I don't think that's a coincidence either. I think these are big bites that retail buyers are taking off the market. And it doesn't matter if you buy from the COMEX directly or if you buy from your local coin shop. It's all fungible. They all come from the same supply lines. Ultimately, it comes from the COMEX and the LBMA and mining companies. that if you supply from them, that COMEX can't get their supplies. So it doesn't matter where you buy it from, as long as it's physical silver, you're doing the right thing. And we can see that it's starting to work, and it's going to take some time, but we're going in the right direction here.
Yeah, and Rafi, as I have, this is the COMEX warehouse silver stocks. And it's interesting now sitting here talking with you about it, and then remembering that we had the big number last July and thinking about the last year. Interesting chart. I know you've heard me say it. A lot of the people on the show have heard me say it. I maintain my belief that this market broke on February 2nd, and we've seen the effects of a cover-up since then. Would you say that what we've seen since February, let's say they knew this was coming to an end, the LBMA confirmed they were worried about running out of silver. I mean, if you're already that deep, probably you would just do anything possible to minimize the damage, get out of as many short contracts as possible. And when I think about how we had record number last July and the metal climbed basically until February 2nd, and then we've seen a decent chunk. I mean, it was right at 400 million ounces. So about almost an eighth has come out since then. Does that match what you've been feeling? Any other thoughts on what we're looking at here? It's certainly been quite a year.
Yeah, yes, it has. And look, I don't think it's a coincidence. I don't think it's a coincidence that the silver stocks, the stockpiles peaked right around the time when the silverbacks got out of their jungles and started buying silver. I think that makes perfect sense. And about this 354.38 million, a lot of that is irrelevant. A lot of that supply, because COMEX is not just for manipulate. It's not only for manipulating the silver price. It does that, but it's also the COMEX stocks. They're vaults for companies that want a silver supply and use it, and they don't intend to put it on the market at all. So a lot of this eligible stuff is not really on the market, so you can just discount it. What's really more important to watch is the registered stocks, because those are the stocks that are for backing contracts. That's when that gets to zero, and then they have to move into the eligible. They're going to have to bid those supplies away from whoever owns them, and we have no idea who owns those things. It could be any company or any rich billionaire who's just using COMEX for storage. We don't know. So watch the registered stocks and forget about this 354. We're really at something like 110, 111 million. And that can be liquidated all in one delivery month.
Yeah, well, that makes a lot of sense, as do many of the things you've shared. And Rafi, would you agree that it'd be wise policy for people to hit the share button and let other people know about the economic gospel that you've been sharing today?
Absolutely not. Don't share anything. Yes.
Definitely don't hit the share button. Absolutely. I dare you to hit it on this Basel III day. Rafi, perhaps we're getting close to wrapping up here, but maybe you could let folks know anything to look forward to coming in the Endgame Investor. I'm sure that if people want to know as things develop and they want the latest on Basel III, you'll be covering that as well in there?
Absolutely. And I'd like to report happily that I found we remember in February, the Fed stopped publishing the weekly money supply statistics, so we can't see how much monetary inflation is actually happening. I found where the stats are, and I will be publishing them monthly on the Endgame Investor, and it'll give us more of an idea of how fast the money supply is moving, not the balance sheet, but the real money supply, the amount of money in the banks. And also, I'm going to try to open an account on that brokerage. I think it was Interactive Brokers you mentioned that is now.
Oh yeah, what are you going to do with an account like that, Rafi?
Doing delivery services. I was frantically trying to get a futures account open that accepted deliveries around March when silver was 10, because I was like, let's do it. Let's just I was looking for like 5 people to go in on a micro silver contract and divide 1,000-ounce bar or whatever.
But, silver, why play around, big boy? Come on. Did you get your account open yet? It's in one of my tabs somewhere in my computer, but I'm ready to go. And in fact, I'll tell you what. You get the account open. I'll have the money ready for a regular silver contract. and we can document the whole thing. I know
that
you
would be fun. Yeah.
on the COMEX, so perhaps you could check in with that person and see if there's any reason, or actually, no, don't even bother checking in. But if you get the thing open, I have the funding ready to go, and I'd love to get delivery of a COMEX contract, and I don't even have to go through the steps of opening my account, or if you could get it moving a little sooner. How does that sound?
Yeah. Okay, that's my mission this week. I'm going to try to get it done. See if I can open an account, and if we take delivery on a silver contract, let's broadcast it. Let's show it how we're taking delivery from COMEX.
Plus, think about how cool it would be to have those bars. I'm told it's a bit tricky to cut 1,000-ounce bars into 100-ounce bars. You don't want to do that. My friend Michael Cabrin at MK Bars, BARZ, great guy. Hopefully we'll have him on the show soon too. But I just think there'd be a lot of benefit. Okay, they're advertising it. So we'll check back in on that. But yes, I'm down. I have a bunch of people who'd like to go in on that, and at least we could give instructions. So if anyone at home wants to get their own delivery of silver, as Basel III and the bankers are sorting out what they're going to do in life after theoretical fractional reserve banking, can just Google Interactive Brokers Precious Metals Future. Or you could do that after you stop by the Endgame Investor, where Rafi the Wise is sharing his thoughts, digging into all this so people like me can go to the beach. I might add is only a block away, and you would not believe some of the silver stores. It's like Silver by the Sea. I was walking with Nibbles. I'm thinking it's a sign. Literally, it was a sign. And we'll get some video footage of that. And Rafi, again, before we wrap up, a kind thank you to Bluestone Resources, Jack Lundin, who you've seen on the show a couple of times. By all means, I do my best to phrase this. I don't know everybody's situation personally, and there's people who know the mining stocks far better than me, but I make sure that all the people that come on here, that I've met, gotten a referral for, that are doing good business, Jack Lundin's family in this for a while. So just as due diligence, but thank you to Bluestone for that. And Rafi, any final thoughts before we wrap up here, sir?
Final thoughts. Makes me feel like Jerry Springer in his final thoughts. My final thought is, let's not expect too much about Basel III for a specific day, but watch the open interest on the COMEX, see if it keeps pushing down over time. And we are at, I think, 3 or 4 year lows or whatever it was. And if we are right about this Basel III thing, taking away demand from paper gold, we should see open interest fall, and we should see the price of physical gold rise, and maybe premiums rise also. And what happens in January when the LBMA has to comply with Basel III, we don't know. It's going to be interesting, and life is not boring. That's for sure.
That certainly is for sure. And Rafi, my final thought on this one, would it be okay with you if I paid for a year's subscription to the Endgame Investor that Yara, who is manning the chat room right now, could give away to one of our viewers and one of your fan club members with a particularly silvery attitude?
Absolutely.
All right. Well, start raising your hands in that chat room if you would like a year subscription to the Endgame Investor. If I've gotten anything right, this must be a big part of what I was reading, even though this part, I don't know about that thing with this silver guy yet. I sure appreciate everything that you've shared here. And again, we'll see in due time what Basel III does or doesn't actually mean. Yet, I think more than anything, Rafi, all the things that you've studied, when you come on and you explain it as clearly as you did, that, hey, we see where this is headed, and go enjoy your life. You've figured it out, and now we can just read the Endgame Investor and relax. Rafi, I'll look forward to seeing you on the beach nearby at Silverfest. I'm gonna go start my garden, and with that said, we'll wrap up. But hit the subscribe button, the notification bell, and that way you can stay posted, and I'll see you again soon.